Today we're joined by Ciara Allan, the CFO at Arc Inspirations. Ciara's been there since September 23, having led the sales of Coupland's Bakery and Woven Group prior to that. Ciara, thanks so much for joining us today. Do you want to just give us a quick rendition of who you are, what you've been up to?
Yes, so as you alluded to, I joined Arc Inspirations in September 2023, so it's almost 2 years now. It was my first role in the hospitality industry. Arc Inspirations is a multinational pub chain in the UK. We opened our first site in Scotland last year, and we're opening in London in October this year, so it's very exciting. And in terms of highlights of my career, I think it's the two transactions you just mentioned when you introduced me. Coupland's was a whirlwind. We sold Coupland's to the EG Group, and it happened very rapidly, very fast, and was a huge success for the founders, the PE house, and the people in the business. So that was a huge part of my career that I really enjoyed, and it was my first transaction, my first PE transaction. And then the second highlight would have been Woven, which is potentially a very strange highlight to mention because Woven was actually put into administration, and it was probably the toughest year of my career. But I'm really proud that through that process, we saved 1,100 of the 1,200 jobs. And that's a huge highlight for me and something that I carry forward.
Amazing. Brilliant. So, Ciara, you mentioned first role in hospitality sector, lots of uncertainty. I remember when we were having lunch out in the sunshine, you said, well, it'll be a great weekend here because of the sun. It blew my mind a little bit to think you are in the lap of the gods where you are. So what is it that you do to sort of manage in all this uncertainty? Because obviously you've got loads of uncertainty around the economic conditions, but then actually within your business itself as well, based on the weather, for instance. What do you do?
Yeah, it's actually probably one of the toughest industries I've worked in for that confidence in cash flow forecasting. When I worked in BDB, it was much easier when you had maybe long-term contracts, customer contracts. So working in an industry where the weather, sports fixtures, payday weekend, kids off school, it's just unpredictable. And you could have a good Easter one year, and next year Easter's really quiet, and we don't know why. So it's really, really tough. What I think really helps Arc as a business is we have 3 different brands, and those brands do complement each other. So that really, for me, sets us strong against competitors and in a tough industry. We have a sports bar, so obviously very hard in the summer because a lot of fixtures aren't on. But then we have a cocktail bar, which, holds up again, mostly in the winter, but not necessarily in the summer. But then we have almost that family-friendly, everyone environment, more food-led, which sort of gives you stability all year round. So they can really complement each other, and we have peaks and troughs. Whereas if we only had one brand, that would be much more difficult. But saying that, trying to manage that cash flow and expectations is tough. So what I would usually do is I always have multiple scenarios. So I do what I think is best from the information I have, but I'll always do an upside and a downside to set expectations because it is so unpredictable.
So do you literally have 3 cash flow forecasts rolling at any one time?
Yeah. Sometimes 5. Depends what week you ask me. But we have the master, and then we'll do a quick what if sales drop, another 10% and 15% for the short term. Mostly for the short term. The longer term, I wouldn't do as many.
So in amongst all of that, then I guess with managing all this cash, managing costs, your role will be heavily on cost control. Do you think there's a difference between cost control measures that harm and cost control measures that help?
100%, and I'm really glad you asked me this question, James. One of my biggest frustrations when businesses are under pressure or distressed or the market changes and everyone goes to, we need to save money, we need to cut cost. It is so easy to make redundancies because it's tangible. So the easiest thing to do, cut sales, cut marketing, cut finance. And you can immediately make that decision. You can put the cost of those redundancies below the line as exceptional, and immediately you can touch and feel that saving. And it's the first thing everyone runs to. But it's so short-sighted. because a lot of those people, for me, work harder when you're distressed or cash flow because there's more projects, there's more work to do. So you're putting more pressure on the people you're leaving behind. But also, as the business starts to perform or turn around, you haven't got the team set up to be fit for the future. So for me, that is cost control that harms, but it's the easy option. Cost control that helps can take a little longer, and it's having the patience to do it. So what do I mean by that? There's 2 activities I'm doing at ARC at the moment that will save money, but actually enhance our benefits for our employees. So in hospitality, as you're aware, we all get tips, cash tips. We've always processed those in-house at ARC, and we pay employers and employees national insurance. But you can outsource that to what's called a trunk master. And under HMRC legislation, if you outsource that to a third party, which you pay for, you don't have to pay employers' nick, nor the employee has to pay their nick. So actually, we can save money as a business, but we can benefit our employees. And that's an example of cost control that benefits. But it doesn't happen overnight. It's taken us 5 months to do that. And I'm also looking at implementing a salary sacrifice pension scheme because we don't have that. Again, that could be a 6-month project for consultation, but it will save the company money, benefit the employee, and it's enhancing. So I think there is a lot of those activities companies don't look to do because of the time taken, and it's a project and it's resource, so it's easy to just cut costs quickly.
And do you look at cost control literally in those binary ways? Do you kind of go, well, that's going to harm and that's going to help, or is it not as simple as that?
I think it's not as simple as that, but I try and encourage less speed, reflect, don't just jump and cut the first cost that's easy to do. Let's just sleep on it. Let's understand it. Is it the right thing? So it is hard to do. Is it harmful? Is it not? And when you have a challenge to cut costs, you sometimes have to make those difficult decisions, knowing you might have more difficult actions in the future, but you don't have a choice. So it isn't black and white, but I don't think enough people think about the cost cutting that actually could add benefit or value.
A lot of finance departments are known as the no corner. Don't go into that corner because they'll just say no. How do you manage that amongst you and your team to make sure that people don't think of you as the no corner?
I think it's about business partnering, and it's not just about cutting cost. Getting people to understand we can help them make a decision. So education, communication, even in difficult times, it's still appropriate to spend money if we think there's a return on investment, there's a long-term benefit. So I think it's building those relationships with key managers, heads of departments, so they actually come to you when they have an idea rather than think you're just going to say no. But there does have to be a little bit of that fear factor, and there has to be a little bit of they might say no. They need to work to ask for it, but having that business partner, and so you produce something to make a decision around a decision if you should spend the money or not.
So you've got that might say no culture rather than the definitely will say no. But a lot of that obviously is then linked to how you manage cash. And have you got some examples there of actually where cash management has been absolutely critical to the business?
I do, and it's one where, again, it was a distressed business that I worked in that unfortunately we did end up putting into liquidation and wasn't so much a success story. But behind the scenes, we were trying to save that business, so the teams and the people did not realise how bad it was. It was the board and the exec. And I ran that business for 12 months. When I joined, we had 3 months of cash. So by cash management, we got 12 months. And it was, again, building relationships, but with customers. There was weeks where I didn't know if I could pay payroll, and we were going to have to make that phone call and that announcement that this business is closed, that no one wants to do. So building relationships with key customers in that situation allowed me to explain how serious the situation was. And we had people pay us early to allow us to make payroll and continue trading. And that was key. But it all came about understanding what levers you could pull. You know, was it paying suppliers late? Was it customers paying early? And just really understanding and who you could trust, because we didn't want any leakage. We didn't want the teams worrying because we were trying to turn the company around and get a buyer.
So you didn't have to give guarantees or anything like that for people to pay up front, didn't have to offer anything else. It was just pure good communication.
And again, with late supplier payments, there was a lot of suppliers so very sadly, this company had gone into administration once before, and it was the mining industry actually, so it's probably important. It was the UK coal mining industry, so really tough industry, and they had gone into administration about 4 years before I joined in this contract to try and stop it happening again. So a lot of the suppliers had been hurt before, and when I was calling them and having meetings to explain the situation to the suppliers, it was the open and honesty. They said to me, no one did this 4 years ago, but the fact you're telling us there's a risk, I never let their risk get any bigger. But as long as that didn't grow, they would also let me pay late, still place orders. So I think it was having that honesty and communication again.
Amazing. So that's an example of how to do it right. You've been in loads of businesses. Are you happy sharing an example of where people manage cash badly?
Well, I can tell you a story where I made a very bad decision. So I don't know if I should admit this in public. So one of the businesses I worked for had a South African subsidiary, and I'd not worked with the South African banking system before. So the very first month I joined, our South African subsidiary was loss-making. So we quite regularly had to send money from the UK to South Africa to pay the salaries in South Africa. And it was the same bank. So I just assumed, I did not ask, I assumed that when I transferred the money, it would be there in 24 hours. It took 72. And no one told me. So on the first payday of the first month that I joined, all the employees in South Africa came to work and asked, where is my money? And I had very, very stout phone calls. I was sworn at. I had to go on a Teams and explain to over 100 people why they weren't paid that day. But the bank was amazing, and we managed to get it in their accounts by 4 p.m. that afternoon. But that was just horrendous, and it was not a good start, and I had to build a lot of confidence. So when you're dealing with cash flow in multi-currencies or internationally, there's other things to think about, which I learned the hard way.
You certainly did. I just want to go back a little bit to the start of the conversation when we were talking about forecasting, and obviously you've got loads of things going on, the uncertainty, but the discipline around forecasting. How do you almost enforce that?
I think it has to be part of the finance function. And I also have two forms of forecasting. So you have your traditional, your P&L converts to your balance sheet, and then your cash flow is an output of that. And I think that's really important. And that's my medium and long-term cash flow forecasting and for the overall business plan. And I'd probably do that once a month, ideally once a quarter, because it's very time consuming, but once a month in quite a volatile economic environment because it can change so much. But then I do my short-term cash flow forecasting. And everyone talks about 13 weeks. You probably hear that 13-week cash flow. Mine's is actually 26 weeks at the minute because I think 13 is not long enough. So having that adaptability. So we do a weekly cash flow forecast, and it's really important you keep that discipline. Sometimes it does not change week to week, but the week that you don't do it, you could miss something. So it is a task of one of my team. It takes them a full day every week. Then I spend 2 or 3 hours reviewing it, and we really understand what that looks like. But the weekly is done in like cash receipts and payments, but then reconciling that in those key weeks that had period end to that medium term, it can take hours to understand why they're different, but actually it's a good discipline because it makes you understand there could be a flaw in that business model. The 13-week could have missed something because they're two different methodologies, but you should get the same answer if they're both accurate.
Do you look back over those to sort of say, okay, how accurate were we? Because I'd see a lot of businesses that just they don't. They kind of do the forecast and go, right, okay, we've done the forecast. But do you have a view on? I mean, there's so much going on, isn't there? There's so much uncertainty. But do you have a view on how good you are at it?
We almost do that every week. in the weekly one, why did we get it wrong? And so it's having that ability to adapt. So we're constantly changing how we do things. We've recently changed one of the VAT assumptions because of the VAT and overhead. So I think every week we look at the weekly one and say, well, why did it not match? What was it? Was it just sales and we can't predict sales? Was there anything else? So we do that on the weekly one as and when we're updating it. In the longer term one, I think we would probably review that every 6 months and think, is the cash flow working and why not and what changed? So actually today we've just been sitting looking at creditor days because we've noticed every single month we're constantly reconciling the trade creditors. So we've just looked at the last 6 months and realised that our creditor days are very different to the assumption in that model. So I wouldn't do it regularly, but when something feels off, we will go back then and look at the history.
It's kind of like a continuous improvement approach then. So you've done all your forecasting. You mentioned earlier about business partnering and being in amongst the business and the importance of the finance team in doing that. What do you think about, obviously with cash and cost control, what do you think about the finance team's role in keeping the rest of the business calm under this kind of pressure?
I think a lot of the business shouldn't know there's cash flow pressure because you don't want people to worry. So I think it needs to be the shareholders, the exec, key heads of departments. But outside of that, I don't think it's necessarily a good thing if there's cash flow pressure for people to understand. Maybe cost pressure, but not cash flow. It can scare people. So I think finance ensuring that they don't discuss it outside the key people is extremely important, but also educating my team because my team see the numbers and they can worry. So I think that's really important. And then it goes back to what I mentioned earlier, those multiple scenarios and communication for those key people. If you give them that downside, that upside, and you're continually communicating it, there's no surprises. So I think that's important. And always build in fat. Build in fat. You don't know what you don't know. So always make sure you have something up your back pocket so you're calm.
The disciplines around cash flow management, we talked about businesses in distress a lot here, or stress rather, I should say, about cost control and cash management. We've probably also seen businesses that were once cash rich that aren't necessarily putting some of these disciplines in. What's your view on that?
Yeah, it's a really interesting question, James. So I joined a business once that was cash rich, and because they were cash rich, they didn't really focus on any aspect of cash. So the year I joined, I think they'd made £1,000 in their current account in interest income. So by just managing that cash flow and doing daily deposits, monthly deposits, working with the bank, in 1 year we went from that £1,000 to £120,000 income. But again, I think sometimes because it sits below EBITDA, people don't focus on what's below that line. But that was real generative income for the business. I also think those cash-rich businesses don't always have 13-week cash flows, don't necessarily put the same focus on it. So when or if the market changed and they became stressed, they haven't got the expertise in-house. And I think it's really important that even if you are cash rich, you have the same discipline that I talked about, that weekly cash flow. You might make it fortnightly, but having that discipline in finance so that knowledge and expertise is there should you need it.
Presumably it helps, going back to the bit we talked about before, keeping people calm under pressure if things do take a downturn. I suppose you mentioned as well within the team, educating your team. Often we've seen people are a bit like a rabbit in the headlights. They'll go into a business, we're running out of money. You've seen the options that are available when cash is getting tight. How do you manage that though with your team to educate them without scaring them?
It depends on the company and the situation. So obviously where I am today, we're not stressed, but there is peaks and troughs in the cash cycle because we are growing and we are investing. We're opening in London. So depending on how cash flows fall, there can be low points, but it's educating them in the confidence that we are a really healthy business. We are a cash generative EBITDA business. So it's easier to do that when you're not stressed. When I've been in stressed businesses, it's also understanding who to do that task within the finance team. So those people that have more commercial acumen, that understand the bigger picture, understand maybe that stakeholder ownership structure, that you've got support from the bank. So you do have to be careful sometimes not having all the finance team understand it, because it can be quite scary and daunting to see that there might be no money in the bank.
You mentioned previously how you've helped other CFOs. So any would-be CFO going into a business where perhaps they got limited financial control, limited visibility, what would be your piece of advice to them?
I think they need to know they can't fix everything at once. And there might be a pressure to change. I'm new, I need to change and fix everything straight away. Seek to understand. So from whether it's the CEO, the shareholders, what is their pain point, and focus on that first, because that gets them confidence. So if they can get a quick win or focus on that first, because sometimes a lot of what's broken doesn't really get escalated up. They don't understand. So you could spend your time fixing something that does make the financial control better, but it doesn't change the big picture. So get those quick wins, get the confidence, get that reputation, and then start to work out what you need to prioritise to get it stronger for the future.
So you've built your finance team as well in various organisations. What does a finance team, what does a finance business partner look like for you in this modern sort of cost-conscious environment, shall we say?
I think it has to be someone that wants to know more than the numbers and not just sit behind their desk. You learn so much by going out in the business and understanding the roles, the pressures, the pain points. And I think that's really important. If you've got a finance person applying for a role to be a business partner, that's a red flag for me if they don't want to do that. It's perfectly acceptable in a number of, those more traditional finance roles and clerical roles. But for example, when I joined ARC, I've never worked in a bar. I worked in a supermarket through uni. And I thought, well, I need to understand this. So I went in and did a shift in one of our bars on a Saturday. The customers were happy because they got lots of free cocktails. I was so bad at it. I don't think the general manager was happy with his margins. But, I went and worked in a bar and learned how to pull a pint. And I also did a shift in our kitchen. And I'm trying to encourage some of my team to do that and to understand it. And I think it just helps build up those relationships and respect between both parties as well. And also have the business come to you. Have days where they come and understand what we do, because sometimes the operations don't necessarily realise that they're only one of your customers. They don't understand you're reporting to the bank, you're reporting to your statutory auditors. They don't know what you do just as much as you might not know what they do. So get out there behind the desk and go and meet the business.
That's interesting, isn't it? I've never really thought of it that second way of getting them to come and see you as well, because we always talk about that, don't we? Yeah. Get out into the business, get on the shop floor, see what happened, but getting them to come and see you. Have you had success with that, or do they push back? Are they open to coming and understanding what you do?
I've been asked in ARC, so I've had one of our general managers email and go, please, can I come, when I've been decided, could I come and learn more about finance and understand what you do? So we've had people, once we've started to go out and build those relationships, they've wanted to come and understand what we do.
Brilliant. So in brilliant finance people, and you've dealt with loads, you've probably got loads in your team at the moment, what is the one key trait that you wish more people knew mattered?
I think it is not looking at a number in black and white. You need to have perspective. Data's data, and you can make your numbers say whatever story you're wanting to tell. So it's a good finance person is someone that can step back and understand the why or the how to tell the story.
Thanks, Ciara. That's been really, really useful. Hope you found it useful too. See you next time.